I don't know if you've been following, but on my videos that I normally post, the last few months haven't been posting as much. And that's because my dad just passed away. So I've been, trying to get back into the groove of it, but a lot of time was spent with him. And when he passed, my sister and I, my family, learned a very valuable lesson, an important financial lesson that I want to share with you guys because it hit us like a ton of bricks and we were just flabbergasted. Like we couldn't believe that we got stuck with this. And we're pretty knowledgeable. Like we're into finance and we know about investing and proper planning. Like I have a channel about it, but you can't plan and see everything. And I figured this is a good opportunity to share with my audience exactly what happened. I'm not giving you financial advice, but I am telling you the proper precautions and things to pay attention to and perhaps discuss with a professional, such as a tax specialist or a certified financial planner, financial advisor. So my dad became very ill, right? He got a bad diagnosis a few years ago. And so he had been fighting it and he had been doing, pretty well for the most part. But if you've been through this, often a person's health will just start to deteriorate fast, right? And he had most things in place. He had a will that him and my mom had set up years ago. My mom has already passed away 3-4 years ago. So it's just my dad. And he was considered middle class, upper middle class. And so he took care of his investments. But growing up, as the older generation does, the baby boomers, he was very, like, don't spend this, live below your means, which everybody talks about. Oh, I'm not buying that and that. So he's very thrifty or cheap with his money. And I respect that in a sense. To a point, you don't want to go overboard, but he wouldn't spend a lot. So he wasn't taking out a lot of his investments and, his retirement. He'd take out the minimum required amount from his RRIF account, right? But that's about it. And he didn't, go on any big trips, wherever he was saving all his money to pass on, or who knows how long he was going to live for. He wasn't sure. So he was sure to maintain all the assets that he could for the longest time. But then, up until the year he died, he hardly took anything out, right? And then the last 3-4 months were just right downhill, right? And we only found out after he passed away about 2-3 months ago. So in Canada, when a person dies, passes on, the CRA considers everything that they had, all the registered investment accounts, their RRSP, the RRIF account, as if they had all cashed out all in that year. In Alberta, currently, the provincial and federal max tax rate sits close to 48%. And I do understand about tax brackets. And if you do, that means that his income gets broken down into certain tax brackets and everything above that threshold gets taxed at that 48% because it's all declared as income. So the full balance gets added to their tax return that year and declared as income. So you get hit often in the highest possible tax rate. Now, just to be absolutely crystal clear, I am not a financial advisor or a CPA. So you should always do your own tax planning, talk to a qualified financial advisor, and consider your unique financial situation. This is just me telling my story. So everything that my dad had protected and scrimped and saved and didn't want to spend all gets taxed at a high level. So 48%, nearly half, my dad has to pay towards income tax on certain portions of his account. So all that savings didn't help a lot, but I understand he didn't know when he was going to die. And that's the troubling thing, is that you're so concerned with his health, right? And then you start looking into the details about the mortgage and what's happening, what happened when he left you, that you don't really think to ask, because in the last few months or years, when someone's sick, your parents or whoever, you're so concerned about their health, taking care of them and making sure things are in place that often these things slip your mind. You start asking, and it's a difficult conversation, right? Well, when are you going to pass on? Well, no one knows, and that's the challenge. But if their health starts deteriorating, you really want to sit down and have that conversation with your family and look into a tax specialist or financial advisor and ask and start planning what you should do with all their investments, because you can take out more than the minimum amount. And in all fairness, my dad had a financial advisor, right? And it's kind of up in the air. I don't want to pass it on to him and blame him and say he didn't get back to my dad. I don't know the full story, but I was told that my dad had asked the financial advisor what he should do, and the advisor didn't get back to him. Or he did, but then my dad didn't follow up. if you're in this situation and you don't hear from your financial advisor and you start asking questions, go find another financial advisor or you follow up with them. Send them an email and say, hey, I need to know about this. What steps should we be taking with our money to properly prepare and plan so that we don't get hit with a large tax bill when the unfortunate happens? And that will really hit you because you might think, oh, I'm getting a few $100,000 or something like that. Oh, I'm getting close to half of that because I'm losing so much to taxes. And that's a heavy loss. You're already dealing with the death of your parent or whomever, and now you find you have to give so much to the government that could have been prevented. So my dad did have a will, thank goodness for that, as my family does too, because it's an important step. But you also want to look into proper tax planning of, say, your parents' finances. So there is something called a RRIF drawdown strategy. And this allows you, look into it for yourself, please, but this allows you, from my understanding, that you can withdraw more than the minimum amount required. So if you're only allowed a certain amount, you can withdraw more and you'll still pay a bit more additional tax on that. But that is far better, in my opinion, than getting hit with a large bill right upon the death, right? That they only took out the minimum amount. Now in the final year, everything comes due all at once and stacked on top of each other as income. My dad withdrew the minimum because, well, he wanted to protect what he had, right? What if he lived for another 10, 15, 20 years? And that's the challenge. You just don't know. But often people will see their health deteriorate quickly, and then you're left with little options, right? Like you're kind of scrambling and you're not thinking about it. You're thinking about him, his health, your relationship, everything else, the estate, all that. And then you find out near the end that that tax planning wasn't in place, that he didn't even, or other people didn't even consider that. It's a hard conversation. I get it. It's a hard conversation to have with your parents or with a stranger and your tax planner, your financial advisor, whoever, but you have to have that because they want the best for you. They want to pass on their legacy and inheritance to the proper people, and I'm pretty sure not the government. So that's one of the conversations you need to have. I actually never had that conversation. Unfortunately, neither me or my sister with my dad, not that specific conversation. And I want to hopefully pass this on to other people so they learn from me and my errors. So if I'm explaining things in my video and trying to teach you, it seems I don't consider myself smarter than you. I'm explaining it because I've done more stupid things than you probably have. So if you withdraw your money too quickly, too aggressively, you'll be left with nothing, right? You'll have nothing left in your bank account for another 10, 15 years, however long you or your grandparents or your parents live. But if you don't withdraw enough, you get hit with a large tax bill at the end, or your parents do, whomever, because it all gets declared as income all at once. So if there is no surviving spouse, the spousal rollover that it's called doesn't apply. That normally transfers to the spouse. However, my mom had passed away already a few years ago, so that rule didn't come into play. But a few great questions for you to bring up with your tax specialist or financial advisor is, what accounts do they have? Is there a plan for those accounts? How fast is their health deteriorating? Is there a plan for how those investments are going to be handled? And are you perhaps staggering his investments? Talk about this with a financial advisor or tax specialist and consider your situation, but it's worth thinking about. Does the financial advisor know about your parents' or grandparents' health, whomever? Is there a will? When was the will last updated? Do key people know where the will is and whom to contact? And most of this, my sister and me had a good foothold on. We knew about it. However, we didn't even consider the minimum and maximum withdrawals from his investments. We didn't know about the huge tax bill at the end that we'd be hit with. It just never occurred to us. In case you're new to my channel, I'm Aaron, a 20-year corporate accountant living in Western Canada. I talk about personal finance and investing and share key insights and experiences and mistakes I've made in the past. And I share them with my audience, so hopefully they can benefit from my mistakes. And I try to make the videos entertaining and really, really educational, and I research a lot of what I talk about. If this sounds like something you'd be interested in, consider subscribing to my channel, as I'd love to have you. And I answer every single comment that I get personally. So if you sit down with your financial advisor, and you can look up all these great questions to ask using AI, right? Like put in your situation to Claude or ChatGPT or Gemini, whatever you use, and just say, give me some key things to ask my financial advisor or tax specialist. this is my situation. This is what I want to talk about. And it'll list some great questions for you and just have that open conversation with them, because you'd much rather have a difficult conversation than just to be in the dark and not know anything and then just wait and see what happens, because often something's probably going to get missed that you didn't consider. It did with us. And I'll leave you with this final thought that I've always said this in my videos, and it's true. And one of my philosophies is no one will care for your money and your investments as much as you do. And that's a fact.